Part 1. It's 3 a.m. in London. Screens glow. Traders stare at numbers that decide the fate of entire countries. Somewhere in Washington, a few words are released. Interest rates change. Within minutes, currencies swing in Asia. Oil prices shift in the Middle East. Stock markets open differently in Europe. That is the power of the US dollar. Or at least, that's the power it has held for decades. But now a quiet question is moving through central banks and government offices around the world. Is the US dollar losing its global crown? Not collapsing, not vanishing, just slowly losing its grip. To understand that, we have to go back to 1944. After World War II, the United States held most of the world's gold and had the strongest economy left standing. At the Bretton Woods conference, global leaders made a decision that shaped the next 80 years. The dollar would sit at the center of the system. Other currencies would tie themselves to it, and the dollar would tie itself to gold. Even when the US removed link in 1971, the dollar didn't fall apart. It grew stronger. Why? Because oil was priced in dollars, global trade was settled in dollars, and US government bonds became the safest place in the world to park money. If you were a country exporting goods, you saved in dollars. If you were a bank lending internationally, you used dollars. If there was a crisis, investors ran towards dollars. Today, roughly 58% of global foreign exchange reserves are still held in dollars. Around 90% of currency trades involve it in some way. That's not just influence, that's infrastructure. The dollar isn't just money, it's the plumbing of the global financial system. And plumbing is hard to replace, but it's not impossible to weaken. Over the past 2 decades, the dollar's share of global reserves has gradually fallen from above 70% to under 60%. Not dramatic, but noticeable. At the same time, US national debt has climbed above $34 trillion. Deficits remain large. Political gridlock raises questions about long-term fiscal discipline. The world's reserve currency is supposed to feel stable, predictable, boring. But America's finances don't look boring anymore. That's where the tension begins. Part 2. To understand whether the dollar is slipping, we need to understand what makes a currency global in the first place. It's not about pride or politics. It's about structure. A global reserve currency needs deep financial markets. Investors must be able to move trillions without crashing the system. The US Treasury market is the largest and most liquid bond market on Earth. It needs rule of law. Contracts must be respected. Assets must be protected. And it needs trust. Long-term trust that inflation won't quietly destroy value. The United States still scores highly on these measures, but cracks are forming at the edges. China has been expanding trade agreements that bypass the dollar. Russia shifted energy sales into other currencies after facing sanctions. Countries in Asia and the Middle East are experimenting with settling trade in local currencies. Central banks are buying gold at the fastest pace in decades, not because they expect the dollar to disappear tomorrow, but because they want options. Here's the uncomfortable truth. The dollar's dominance gives the United States enormous power. Through its control of dollar clearing systems and financial networks, it can impose sanctions that effectively isolate countries from global trade. That power is real, but power can motivate alternatives. If you're a government watching another country lose access to the dollar system overnight, you start thinking about backup plans. Diversification begins quietly, gradually. However, replacing the dollar is extremely difficult. The euro represents a large economy but faces political fragmentation and debt challenges. The Chinese yuan is growing, but strict capital controls and limited transparency make global investors cautious. Gold is stable over centuries, but it cannot easily settle digital transactions across continents in seconds. Cryptocurrencies remain volatile and lack unified global adoption. So despite growing talk of de-dollarization, the alternatives are still incomplete. That's why the dollar remains dominant. But dominance built on relative strength is different from dominance built on unquestioned trust.
Part 3. Now we arrive at the mechanism most people overlook. When your currency is the global reserve, you gain what economists call an exorbitant privilege. The United States can borrow in its own currency. It can run trade deficits without facing immediate currency collapse. Foreign governments and investors recycle their dollars into US Treasury bonds. In simple terms, the world helps finance American spending. But here's the catch. If foreign demand for dollars slows, even gradually, Treasury yields must rise to attract buyers. Higher yields mean higher interest payments on US debt. In 2024, interest payments are projected to rival or exceed military spending. That's not symbolic. That's structural pressure. Higher interest costs widen deficits. Wider deficits require more borrowing. More borrowing increases supply of debt. It becomes a feedback loop. Now imagine central banks around the world slowly reducing their dollar holdings each year. Not dumping them, just trimming exposure. Small percentage shifts can have large consequences when trillions are involved. History shows reserve currency transitions take decades. The British pound did not collapse overnight. It slowly gave way to the dollar after wars, debts, and shifting economic power. The same could happen here, or it might not. The dollar still benefits from deep markets, strong institutions, and the fact that in times of crisis, investors continue to run toward it. Even when America contributes to the volatility, the dollar often strengthens. It's a strange paradox. People complain about the system, but they still trust it when fear rises. So is the US dollar losing its global crown? For now, it still wears it. But the grip is no longer effortless. The real question isn't whether the dollar collapses tomorrow. It's whether the foundations that support it, fiscal discipline, political stability, institutional trust, remain strong enough for the next generation. Because in global finance, power rarely disappears suddenly. It erodes, and the most important shifts often happen quietly, long before most people notice.